Welcome back to the class. We was having a very big time network issue in which network was really breaking a very big time. Like the network was really bad and frustrating. But that shouldn't make us to end our class or something like that. Um, that was just a source of motivation that we really need to put more effort on what we are doing. Now, let me just get back to this. You can see, although I've already taught this basis of forex trading, this is a downtrend. Okay, now this is called the market structure. Let me just be making this is probably going to be long or something like that. It will be a long class because it's just for beginners. This is called the market structure. I think I'm making use of my VN this thing, of my keypad voice not typing, and also hope you guys are hearing me. I'm really sure that you guys should be hearing me by now. So now this is a clear example of a downtrend. This is a market structure. Market structure is classified into two: a downtrend, an uptrend, and the other one which is around here, but I will show you guys later. This is called an uptrend. You can see this is an uptrend. Up. Oh. They just okay. They just continue with what we are doing. Leave. I don't know what was this one is sending to me. Now this is an uptrend. This is an uptrend. This is an down. Oh, sorry, I made mistake. This is a downtrend. Sorry to say, trend. And this is an uptrend. This is an uptrend. I'm having a kind of notification that gold is about to break some levels, so let me check with my other phone over here now. So this is an example of an uptrend. As I said before, we only have three types of market structure, which is downtrend, uptrend, and a consolidating market or a sideways market. You can see this one is moving up and this one is moving down. This one is moving down, this one is moving up, and this one is consolidating. And in all these, there is a support and resistance. Support is just like a ground and a resistance is just like a ceiling. Just let's use this perspective for example now. A tennis ball in a room, you have a tennis ball with you, and you can see once you throw what happens when you throw the tennis ball up. What it does is it will hit the ceiling and go back down. That is just what a resistance is just trying to tell you. That is what a resistance is, and the resistance is the red line. And what about support? We are saying support is just like when you bounce the tennis ball on the ground, you see that it will probably bounce up. So that is what this market is just trying to do over here now. You can see it went down from here. It started, maybe it was in a downtrend or something like that, reached to this point, hit here, went back up and reached this resistance and went back down. Reaching to this level, it went back up and also went back down. You can see it's just consolidating. It doesn't have any clear trend like this. You can see in this market there is a trend, like it's making higher high. Okay, for there to be an uptrend, there must be a higher high and higher lower high. What do I mean? You can see this high, they just make use of hedge as higher high. They just okay, actually I was trying about some minutes ago. This video is really taking me a lot of time, that just although it will be very snappy for you guys to learn and understand this, like I'm just trying to make this thing easier for you guys so that at least you will see the worth of what you are paying for. You can see here we have what this is a higher low. I mean, okay, let's just leave this one out. Let's just say the market comes from over there from there. Let's just remove this, and you can see this is a lower high. You can see this high now here. This high wasn't above this, as you can see. Let me just full chart my this thing so that everyone can, you can see here. This market now, let's just say this price here now, you can see where my arrow pointing is pointing out, is not higher than this. You can see there is a big difference, like it is very lower than this high. That is why you called it a lower high. Before you talk about that one, you can see this low now. There is a very big low here now. Maybe just say maybe the market was coming from something like coming up, coming up, coming down, coming up. Then you can see market then make a lower low. Then because the market doesn't just move like this, move down pure. No, it doesn't do that. Because once it's just like creating an the phrase of life, a balance and imbalance. The market will first create an imbalance here, making a very big down move, then has to take a breath, just like you're breathing. Like you breathe, then you have to breathe in to just gain, I mean, to gain some kind of breath to breathe out again, something like that. So the market just make use of the market, just breathe in, and just now once the market break in, because we are in a downtrend, maybe the price is doing some kind of correction and all the rest. When we get to chart, I will be showing you guys what correction. But here now, talking about correction, here is the correction phase of this market. Here now you can see here is the correction phase of this market. Also now, now the market has did a little bit correction, and now it's going to pull down again, creating an imbalance. You can see the market, there is a very big imbalance over here, making the market to create another lower low. You can see this low now, this low here now was is very low than this, making it a lower low. And you can see this high now, making this high now is a lower high, because it didn't take this thing out, it didn't take this high out, therefore it's a lower high. Then this is a lower low, and here is a lower low, and here is a higher high. And you can see the market continues a downtrend. This is what we mean by downtrend. I think you guys will be able to understand this downtrend. Okay, now let's move on to an uptrend. Now an uptrend is where the market is probably making a higher high and a lower high. Remember the difference. Downtrend, the market is making a lower low and a lower high. An uptrend, the market is making a higher high and a lower high. Okay, now let's just take this thing to chart. I just said now. You can see here the market made a move. The market made a move from here, went up, creating a higher high. You can see this, maybe just the market was coming from here, something like this, and the market just created a higher high. Then it went down to create a lower high. That is to say, the market doesn't just move. Market doesn't move something like maybe no, I've taken out something on my chart, but that's not a problem. The market doesn't move something like, market doesn't move like this. No, the market has to test and retest, causing a balance of structure, because it's impossible for a market to just move something like up or something like down on a straight way. What we are saying is, as you can see now, we have this high now. This high now is let's just say is, they maybe say, let's just say we have some kind of high here, and it's down higher than this. Then the market has to balance. This is an imbalance, balance, imbalance, balance, imbalance. So you can see now the market is making a higher high, higher low, higher high, higher low, higher high. This is how trend works. It doesn't I know some people will be a little bit confused, saying that since we mean an uptrend, that is an uptrend is some people will be saying an uptrend is just something that just went straight up. This is an example of an uptrend, but the market doesn't work like this. The market has to balance. For even if there is maybe market just went up in a strong direction, maybe because of news or something like that, you see after later in the day, or maybe some days, some weeks, some months, the market will mostly, like, it must one day, one time, it will just come back to cover this. You get, it will just come back to cover this, even if it doesn't cover it, or it will just at least that we'll be learning that when we about this imbalance and market, we'll be learning it in break of structure. So that is another this thing that you should pen down. Maybe you can ask me the question on break of structure, but this is the market structure. Okay, let's just move deep. Let's just move on. Let's just continue concentrate on market structure so that you can know the basis of market structure. Now moving on to you can see I already cleared the other one. Now moving on, let's just turn this to red or some kind of flashy color. Oh, this color is dim. Oh, I hope you understand, Sha. But now you can see market. This is another market structure. We have already talked about uptrend, talked about downtrend, talked about many other trends, and now you are going to talk about consolidation market, a consolidating or a sideways market. So now you can see the market is just like consolidating. It went like you remember, you can see here we have a equal high, equal high, equal high, equal high, equal high, equal low, equal high, equal low, equal high, equal low, equal high, equal low. So what usually causes this pattern? You might see this pattern, chart pattern in any kind of time frame, and you know that anytime you see this, you just wait for a breakout. Maybe they just say this market is broke out, then kind of reverse or something like that, kind of reverse and test this resistance before pulling up. But first, we are not talking about that. We are just talking about consolidating, where the market is making an equal low and equal high. This is what we mean by consolidating. After this, I will take this into the chart. This is just a brief teaching on consolidating as a market structure. This market has been based on market structure. Then let's just take this down to a chart. I think about some weeks ago, Euro USD card has been consolidating. Then also let me just take all this thing out. Take it out, take it out, take it out, take it out, take it out. Now let's move down to a chart. Okay, now moving over, before we move to the chart, what is technical analysis? This is a question. Just take down your pen and biro and your book or any other thing that you make use to just let me just drink some tea first. Any other thing that you make use of to analyze your chart or something like that. First of all, you need to understand what technical for these are the types of analysis. You need to understand this. This is the this is called a sentimental, not sentiment, or you can just call it a sentiment analysis. Okay, kind of. Let's just leave it like this. It's also correct. Sentiment analysis. What does if someone just woke up to you one day and just ask you what is technical or what is analysis? Analysis is just like a setup or a graph or something like that that is being drawn or written based on tangible reasons. And also talking about technical analysis is the use of past historical data. If you can just if data will confuse you, just make use of, because market is just a matter of candle or something like that. Because when you make use of data, is that some people doesn't make use of candle. At least you can see it here. Some you make use of bars, some make use of halo, and you can see it over here. And some make use of volume candle, but I make use of candle, and candle is the best of all this thing data, because it lets you, as in it allows you to read through what the market does at that exact point in the previous time. So technical analysis is now making use of a past historical data to predict or analyze the future market, what the market is probably going to do in the future. Now what I mean by probably or potentially is the market. It's not every time that the market doesn't respect anything. It does what it wants, and that is why we need to understand it more. So now the market is just like let me just say how to understand what is hard to understand. Let me just use women or something like that. It's very hard to understand. Market is very hard to. It's not even hard, but it's very simple when you understand it. starting from the beginner, you think it is very hard, but once you can read through the market structure, candlestick, and be able to identify your break of structure, other block, and others, it's very very simple. You can even see what the market will do, and once it reach that place that you say that to do that kind of thing, to just you just see it moving moving in that same direction that you predicted. And once again, I want to tell you something. Forex is a business. I would really like you to treat Forex like a business and not like a gamble. Forex is the best rewarder. It's one of the best rewarder. One of my distinct motivation that I do just keep is, I just wrote it. You just in the business of trading, the customer is the market, and your product is your analysis and how you execute them. I repeat, in the business of trading, the customer is the market, and your product is your analysis and executions. So it's not something like maybe it's just like a market. The more your product, the better your product, the higher you sell, and the higher you sell, your higher your reward. So that is how the market works. Before I move down to what is fundamental analysis, now we are done with technical. We are moving into fundamental analysis. I see fundamental analysis can be defined as the use of events the use of events, political events. When I mean event, I mean it covers political events, um, interest rate events, all these kind of events that usually happen in a geopolitical zone or in a particular country at a particular time. Just like the interest, let's just make use of our country, Nigeria. The minimum wage was increased by the presidency, and you can see that day that it was increased, the naira gained a value of about 40 naira or something like that. You can see that is an event pushing, making the naira to that, as in it's strengthening the naira with about some percentage of money. And that is how trading works in every country. Maybe for example, now if there is an instability in United States, maybe like this United States is having a campaign, what you have to see, you see that they are going to be having some kind of instability, like their pairs, their currency is going to be fluctuating. And that if there is something, okay, like you can watch what gold did. Okay, I have even a clear example of fundamental analysis gold. Let me just make use of the 4 hour time frame. You can see there was a very real push up on this market from this zone. This was around that day, Tuesday, that day that Trump was short. So you can see the market made the highest high of its time in history ever. This is gold. This is gold USD. You can see it over here. This is gold spot / US dollar. You can see it is made the highest high, which take the gold to 24.80. This is my favorite pair or favorite currency that I love to trade. So you can see it over here, and also you can see after this retracement is just a technical retracement. After the bombing in this thing during the night, it pushed the price a little bit up, but the price managed to go down because if it is in my other phone, I would have shown you. Here is a supply zone. Here is a supply zone. You can see that price didn't mitigate. Here now is a demand zone. I mean to say a demand zone, and price is probably going to come over here. You can see price is going to come over here and mitigate it. Even if it doesn't mitigate it for now, maybe if price just move up to something like a little bit of here, maybe going to the supply zone, and it might just hit back down. But I'm expecting price to come back here. If it manages to break that zone, then you know that price will be expecting a buy order from here. But I'm sure price is probably going to push up. I'm very kind of certain or I'm sure of it, but we are not yet in for learning this now. So after this now, what's next? We already told you, talked more fundamental. It's just a matter of event, news event. But remember, for every currency pair there is a news event, and each news event do affect currency pairs. I don't until we reach the place of fundamental analysis. I'll give a different class. What I'm doing here is just like my charts, all these some of my indicators and all they are just technical analysis. Then this fundamental is just kind of the impact from the country, the monetary impact, and the rest, the political or event that is happening in the country. That is what we consider as fundamental. Then sentimental is just from us. Now in sentimental, this is where you find your liquidity. Write down liquidity under sentimental analysis or sentiment analysis. Sentiment is just like how you perceive, like how you assume this. There is a two types of trader in this market, and there is a breakout trader, there is a rejection trader, and here is where liquidity comes in. You can see there is a trader that will say that once this market moves from here. Okay, there is this type of trader. I think I've talking about this line because I thought my video was on. I didn't know that I posted it because I was on a call. But there is a two type of traders. There are people that should be waiting. This I'm not talking about sentimental analysis. I hope I'm done. If you have any question on fundamental, you can still ask me. Now I'm not done to sentimental analysis. Sentiment analysis. What is sentiment? The sentiment is just the art or the perspective that perspective is different. Everyone as in sees things in a different way. Maybe some few people will see this in a way or something like that. Then we only have two types of trader. Let's use our brain to check this. We only have two types of trader: the buyers and the sellers. Now, what are the buyers waiting for? What are the sellers waiting for? Now, the pro traders will just wait for a market to, one of the best key to successful trading is patience. The pro traders will just wait for the market to break out from here. This is the highest swing high, and this is the highest swing low, and this is the lowest swing low. Then you can see that the market, for me, what I like to do is in this consolidating market is that once it breaks out from this zone, from here, from this, you can see this was a high. Let me just zoom in so that you can see very good this thing, see it very clearly. Once the market breaks out from here, I would like to enter for a long position from here. I'll wait for you to retest this other block, for you to retest this market break of structure, for you to retest. Once it's retested, I'll enter for a buy over here at this point. Then wait for the market to go up, maybe just move my stop loss to somewhere like here and manage my market. That should be, I should be teaching this on trade management class. This is a trade management for this stop loss moving, so that I don't but just make sure you be moving your this thing for my students that are learning, and also for many other people. Just be sure that you're moving your SL to break even. So now just proceed. And there are other types of traders that will be waiting for the price to break this low and move down with momentum, break it with momentum. Like, price is valid when it is broken with momentum. What do I mean by momentum? This candle here is a momentum candle. This candle is a momentum candle. This is a momentum. Okay. This is a momentum candle. You can see it has very power. It was like it's open, like push down, price pushed down from here. Price opened here, went a little bit up, pushed down to here, and went a little bit up and closed from there. And this is an indecision candle. Let me just move it to an indecision candle. Okay, let me just delete this one. This is an indecision candle, but this signifies that the bears are currently in the market. You can see it over here. This is an indecision, and nice spot. This is called a gravestone doji. Yeah, okay, this is a doji candle, a hammer, or you can just call it a hammer here. Like you can see here, it seems as if it is a hammer. Like, okay, I've already talked about this one. just make use of this one as a vice versa. I'm already entering into candlestick. Let me just leave this to when I enter to candle. Okay, let me just jump into candlestick. We have already understand sentiment. That is the place where buyers and sellers are entering or something like that. A zone where a point of interest for maybe here is a point of interest like this 4 hour time frame. Here's a point of interest. Here is a point of interest. So where you will look out for. Then we are already done with this. Now let's move on to candlestick chart pattern. Like okay, no, before we move to chart candlestick, then just go down to, because after tech market structure you now learn chart pattern, and I'll tell you mistakes that people do make in chart patterns. Okay, actually I've already drawn it. Now this is a W chart pattern and a M chart pattern. It's not called chart because I can see in my screen I'm having something like chart or chart pattern, but it's chart like CHART. CHART. You can write it down. You can just make use of your notes. There are many other chart patterns, but let's just talk about this. These are the one of the most profitable ones because I've already tried it, tested it, and many other people will show you this. Like many other people will just show you something like from here, maybe from here, making it top as in the M chart pattern. But I want to teach I want this thing, the people that I'm teaching, to be as in, so that they can just understand many things faster than just having maybe the bad or ugly experience of drawdown or something like that. So you can see here now, we have a M chart pattern, W chart pattern to the left, then M chart pattern to the right. You can see price went up in this. Okay, let's just begin in the W chart pattern. The W chart pattern went down, price went down and created a lower low, created and went up, forming an equal what, an equal highs, and moved down, forming a low, another low. But you can see, just look closely, there's something I drew that will make this chart pattern very valid. Make sure before, even if you spot a W chart pattern, make sure that the second candle, like the second leg, doesn't cross the first leg. If not, it's a manipulation. Just leave it out. Get? So some chart pattern will just will be created in the market for SMC to just use you and add to like liquidity. Liquidity is your stop loss. Like when you are stopped out, when your account is blown, you add liquidity, and liquidity act like a fuel for their moves. You get? But when we are into liquidity concept, I will just teach you guys this thing. Just saying now. Then the price went up. Before you should, it's either you enter for a buy here, or you should wait after the breakout. You should wait for a retest, which is in this zone, before you enter for a buy. And this is very, very profitable because you just know that the price is about to skyrocket. And you can see over here the same thing is applied, vice versa. You just have to wait for this price to retest this zone before moving down. So that is it. We are done with this chart pattern. This is the basis of chart pattern, but I'll be speaking on more of it. Then what is candlestick? Now what is candlestick? A candlestick is just a past historical data, like that shows the price movement, the price fluctuation in the current market or in the past market. So every candlestick has its meaning, and the ability to understand candlestick, we have many example of, let's just say the Japanese candlestick, but I'll give you guys somewhere to learn that one, so that one will be simple for you guys to learn and understand with a very clear picture. But how do you read markets? You read markets by understanding the candlestick, saying what is candlestick. Do you know that the candle exactly speaks? Okay, let me just tell you what is this momentum candle. They just make use of this. Let me just read through for you what this market is trying to tell you. Now. I don't know what's happening to this thing. What is this market trying to tell you now? This is that candlestick. Okay, what do the market want to tell you? This candlestick is talking about that. This market is trying to tell you that I opened here. I opened here. I went a bit up and I pulled down. to this zone, to this place, and I wasn't able to close below here, and I was able to close above here, causing me to have week. What this week is now like a rejection. That is the price here was rejected to this zone before the closing. Then it was closed out. Then this one opened here, but you can see this was equal, and it went a bit up, then pushed down to this place before it went and closed. It was pushed up back and closed, and here also the same thing. Then what is this bullish gravestone doji trying to tell us? This is trying to tell us that the price opened below here. You can see opened below here, went down a little bit and pushed up all the way up and was rejected. That is to say, the sellers are more stronger than the buyers in this market. There are many suppliers, there are many sellers in this market currently here now. Then the price was able to be taken down by sellers. Sellers bought a lot that made the price to went down, and there was no much buyers, making the supply to be much, and there is no buyers to buy at that current time. So the price was rejected to here and closed here. This is an indecision candle. This is a doji. This is a doji. This is an indecision candle. You can see the market doesn't have any clear trend. Like when to make use of this is to know, once you see this doji candle, you know that the market is an indecision. There is a very big tug war between the buyers and the sellers. And I think our time is really up, but let's just stop here for today. What you just need to know is that this is an indecision candle. Here is an indecision candle. Here is an indecision candle. And also, but this is a bearish candle. Although it was a very indecision candle, you can see it has a long wick that showing you that price opened here. Price opened here. Okay, price opened here, went see where price should open, exactly here, then pushed up to this place, then was rejected and was pushed down to this place, to here, then it closed here. You can see price opened here. Okay, price opened here, was pushed down and was pushed down, and okay, pushed up and it was rejected by the bulls. Like it was rejected by the bears and was pushed down to this place and closed below this. You can see it. So this is a very good momentum candle that doesn't work house week. As you can see, here is a momentum candle, here is a hammerhead, this is a hammer candle, and there are many types of candle that I'll be talking about. These are the Japanese candle, which are very, very much important. This is also that this signifies to us that price opened below here, went a little bit down and went up all the way up here and got rejected and closed at this level, making this to start from here, went a little bit and moved up to this level, and making this one to open below here, then went a little bit down, went up and got rejected down here. That is what price is going to. That is how to read the market. Now let's just see. This market went, okay, I will use this thing to show you on a lesser time frame what I mean by this. The market moved up here, it's opened below here, it opened here at this point, went all the way up and is rejected. You can see there is a lot of rejection, it's coming down. Then let's just move to 1 hour time frame. Let me show you what I'm trying to say. As you can see, there is an indecision here. The market opened around here in an indecision, went down, okay, went up and got rejected to this place, and now moved here, went all the way up. Now you can see there is a bear rejecting that and making it to be a wick. That is to say, it is now a wick. You can see weak. The weak I mean is not weak, but I did not being weak or something like that. It's weak, W-I-C-K, weak, so that you don't get confused. This is called the weak, and the body of a candle is this. Like the main body is this bigger one, this thing. Then these tiny legs are the wicks. So that is how to read the candle simply. If you have any question on this, you can feel free to DM me and ask me.